Captains of Industry, brought to you by Airtel.
When Renaissance Capital set up shop here in Africa, newspaper headlines read, "The Russians are coming." They brought more than vodka and rubles. They assembled a great team of financial expertise with a hunger for assets such as oil, gas and minerals. Now, leading the team is a renowned investment banker. Well, he says, "I'm a trader." Clifford Sacks. He's the CEO of the SA operations and head of their Pan-African equities. He's the former head of Merrill Lynch South Africa. Clifford Sacks is our captain of industry tonight. Thanks so much for being with us, Clifford. Now, the call to lead Renaissance, some have called it as daunting as starting a brewery in Africa. Was it really like just starting everything from scratch? Was it daunting?
Well, it wasn't starting everything from scratch. We didn't have a business in South Africa, and we had the opportunity to start from scratch. Yeah. We got a little bit lucky in that at the time we arrived, BJM was for sale, and we were able, very, very luckily, to buy, I think, the preeminent independent research brokerage in South Africa. The rest of the footprint was a really good in-country footprint across the continent. So again, I got a little bit lucky. I walked into a fantastic business. Yeah. Okay. Are you lucky? Is that sort of something you have? Oh yeah, definitely.
Now, when we talk about Renaissance, we often mention the fact that it's a Russian institution, but you've often argued it's not Russian. It may have a global presence and its headquarters in Russia, but it is not Russian. It's cosmopolitan. What makes it cosmopolitan?
We're a frontier bank, and I suppose what makes us different to a lot of our competition is our focus, our core business is around frontier markets or emerging markets, and that's where we position ourselves. We think that, and we, by the way, we think that the recent turmoil across the planet, much of which has been driven by developed markets, vindicates our decision to focus in areas where we think there's going to be long-term growth.
Okay, let's talk about that template that you take from Renaissance in Russia, because as a frontier bank, obviously, they started off 20 years ago working and providing services in the former Soviet states. What lessons have been learnt that then allows you to emulate that success in an economy like Pan-Africa, like Sub-Saharan Africa, rather?
I think you have to have a different appetite for risk. You have to have a different level of patience. And I think starting the business, I think Stephen and the team who started the business 17 years ago in what was then the Soviet Union, learned how to deal with riskier situations. So, we didn't, as with most banks, open in Johannesburg as our initial foray into Africa. In fact, Johannesburg's been our very last office to open in Africa. We started in more interesting geographies across the continent. And I think the experience in what was then the Soviet Union has stood us in good stead.
Those riskier assets, what are we talking about here? Because people often say Africa is a political animal before we talk about the economic opportunities. You've got to know how to wheel and deal with the power brokers, with those with vested political interests. You've got to know how to navigate that terrain. Has that been the experience?
Definitely. And again, I think there's a parallel with Russia in this. You need to be sensitive to the fact that you are dealing, certainly in Africa, with vastly different cultures. And even countries that are so close as Ghana and Nigeria, vastly different cultures across those two countries. So I think sensitivity. I think coming into Africa without a sort of colonial or paternalistic mindset is hugely helpful. And by the way, I think the Russian heritage of the bank has stood us in good stead, in that Russia has lots of friends across the continent.
Talk to us about how the Russians feel about Africa, because obviously it's been a great moment for South Africa in the last year, finally becoming a BRIC member state. And we see a huge profile for India and China, and to some extent in the Lusophone countries for Brazil. But you don't hear about Russians being connected to Africa, maybe Gazprom and some oil interests in West Africa, but nothing beyond that.
Well, if you think about what the Russians have come through in the last 20 years, since the fall of the former Soviet Union, this is a very, very entrepreneurial nation, a highly, highly educated nation, really, really smart people, risk takers. And I think if you just think about that sort of backdrop, Africa's is wide open and welcoming to all of that. So, have you seen the same sort of profile in terms of Russian investment as you have, let's say, with Chinese or to a lesser extent Indian. I don't think you've seen that yet, but we are starting to see more and more interest from Russia across this continent.
In terms of your scope of operations, where are the greatest deals? Because there is a sense that you're really involved in the minerals and resources space, and many people are saying it's time to go off the beaten track, man.
Naratu, our focus is on resources. It's on oil and gas, it's on mining, and by the way, this is where a lot of the demand lies. So if you think about all the Asian investment poured into Africa, a lot of it's looking for those sorts of assets. That said, there's a fast-moving consumer good boom as well, because you've got a massive consumer population across the continent as well, approaching 1 trillion people. Yeah. You've also got a very neglected sector that we think is going to be very exciting in years to come, agriculture. So we think there's going to be a huge amount of opportunity in agriculture. We incidentally have a speciality group of agricultural bankers at the center. So we're one of the few banks, I think, to have agricultural expertise within the bank.
How do you sell that? How do you sell agriculture to investors in New York and say to them, this has great potential, not so many risks, land reform is not as complicated as it looks in Africa?
It's challenging. It's challenging. It's challenging partly because there aren't that many listed opportunities right now. There are a few. It's challenging in that I think the continent and in fact the world is still getting to grips with the right economic models of farming. So it's not as obvious and immediate as oil and gas, as mining, but it's a sector of certainly of interest and one that we are developing.
I want to vindicate myself here because I've had so many arguments with so many different bankers about what we've seen post-credit crisis, and we talk about Africa and the frontier markets, the emerging market of South Africa and Nigeria, and we keep on talking about this money that's looking for yield in Africa, but when you look at the statistics, the money is actually going to Asia. That's where people see greatest opportunities, to Eastern Europe, maybe to Latin America. And then as an afterthought, Africa. Certainly it's a lot higher than it was in the past, but it's not on the proportions that we like to make out. Are we being overzealous? Do we like to hype this Africa, the new frontier, too much?
I think you're wrong. And I'm going to give you a couple of examples. We recently advised the SR Group on what I think is the biggest investment in the history of Zimbabwe, pre or post-independence, a $750 million investment that could, over the next 5 to 10 years, look more like $5 billion as they erect infrastructure, slurry pipes, railroads. And this is an investment, by the way, this is a particularly interesting investment. Zisco, the previously state-owned steel mill, was bought by the SR Group, or a majority interest was bought by the SR Group. This is going to involve a huge amount of introduction of technology, job creation. The SR Group are going to be taxpayers. They're going to build a lot of infrastructure around this, which includes infrastructure like railway. So if you think about this, and by the way, this is in Zimbabwe.
I'll ask you about that in a second.
So if you think about that, this is a significant investment in a country where a lot of people have shied away until now.
So why do you go where people fear to tread? Because obviously you've set up shop Johannesburg, Lagos, Nairobi, and now you're talking of a full-scale operation in Zimbabwe. I know that the ZSC has outperformed many other indices in Africa, but there's still the bogeyman, Robert Mugabe, indigenization, all these other things that we talk about when we talk about Zimbabwe.
We think in time all of this turns, and we think Africa is proving a lot of the naysayers wrong in this regard. So again, cast your mind back 5 years. How many democracies do we have across Africa? In fact, we had a lot of problems. Look across the continent now, and every day you see a new democracy popping up somewhere. And we think, by the way, that ultimately Zimbabwe will go that way. We also believe that, as do some of our investors, thankfully, that you have to get onto the camel's back. I heard this, someone said this to me in Egypt a couple of months ago. You have to climb onto the camel before he stands up. Now, I can tell you, I went for a camel ride a couple of weeks ago in Cairo, and believe me, you want to get him while he's sitting down, not when he's standing up. And I think that's what investors like the SR Group are doing in countries like Zimbabwe.
Well, the camel has no knees. That's why, obviously, he'll jump up and knock you off. You could argue the same about Zimbabwe. There's great heritage, great infrastructure, a wonderfully educated population, but they're not there anymore. They're not there anymore. That is why people choose to invest in the stock market and not bring their money physically into that economy. How do you make sense of an environment?
Well, I think Zimbabwe has a huge amount of latent potential. So, still a good education system, still great teachers. You know, some of the infrastructure has crumbled and is no longer there. You know, I think this is a population with an entrepreneurial spirit. And again, it's just a matter of allowing them to vent that. And by the way, you know, when we made this investment, politicians from all sides of the political divides came together to allow this to happen. So I think there's also a recognition among the people of Zimbabwe at a political level, as well as at commercial and business levels, that they need and they want this sort of investment. And they are going to create a backdrop that allows this to happen.
I'm going to put you in a corner now. Test your patriotism. South Africa or Nigeria?
Look, I'm South African.
No, really, because obviously we are being told that Nigeria is positioning itself to be a G20 economy by the year 2020. If growth predicated at 7.8% stays that way, the value of that economy could grow exponentially and outstrip the value of South Africa's economy. They've got over 140 million people, so they've got the critical mass, they've got everything going for them, the oil wealth, and people are saying, really, that's the African giant, that's the economy to focus on. South Africa's a saturated market, it's not exciting anymore.
No doubt. I mean, there's absolutely no doubt. In my mind, there's no doubt about that. For me, I think Nigeria is the China of Africa, basically. You know, if you think about this 140, 160 million people, give or take 20 million, massive amount of natural gas, oil, again, a smart, well-educated population, hugely entrepreneurial, a reasonable infrastructure, not nearly as good as it could be, some levels of corruption, but a stable democracy. You know, Nigeria, it's not a matter of when. Nigeria will certainly become the biggest economy in Africa by some distance. It's a matter of it's not a matter of if, it's a matter of when. Yeah. No doubt.
All right, now prior to Renaissance, you were co-CEO of Merrill Lynch, and underscore the co part of it, I think, and you can correct me, yours was to lead the South African equity side, and then you worked with an American. What was that like? Because I would assume it's difficult to co-pilot. I'm just assuming.
What was it like working with Mark? It was great. Honestly, you know, I think co-CEOs or co-roles work incredibly well where each co has a well-defined role and expertise within that role. And in the Merrill situation, Mark Helen and myself, I think work particularly well together because Mark is a superb banker, and he ran that business incredibly well. I'm a markets person, I'm a trader by background, and I ran the trading business. And I think we understood each other's remit, and we worked really well together, and we got on a personal level. That's important as well, I think, having a personal chemistry and a personal connection. And I think that's where these situations work really well.
But I mean, you must have been tested individually, because ultimately you've got to feed off his strength, he's got to feed off your strength. So there may be moments you need to back down when you don't want to back down. Those lessons that you take with you into Renaissance from Merrill Lynch?
Well, you know, I think in that situation, rewinding to back then, there was a lot of trust between us. So, you know, I don't recall one situation that we really had a huge amount of tension or stress between us or between the two areas of the business. You know, what I did learn at Merrill Lynch in my 13-year stint there, both in New York and in Johannesburg, is how to work across borders. Because one thing that you need to understand in a big bank is how to get people to do what they always don't want to do. And so I think behaving in a collegiate way, getting people to bring resources down south when you needed them, that was a lesson.
Yeah, I think we'll take those lessons with us into the second half of the program. We're continuing to speak to the CEO of Renaissance, Clifford Sacks. He's talking about how important it is to be collegiate, how important it is to be cosmopolitan, how important it is to build a consensus, especially at a time where Africa has just opened up. It's ripe for business.